In today's video, I'm going to give you some reasons and examples of why a recession will tank America's housing market. A lot of people seem to think that because demand is so high and supply is still so low, that there's no way a recession could actually make the housing market crash. If a recession comes, there's a few things we need to look out for. One is supply and demand. Two is the consequences from the stock market. And three is unemployment. And between all three of those things are going to be the most major factors that are going to contribute to whether or not there will be a housing market crash, or if it will just be more of a correction, or what have you. However, I do think because a recession is looming, that it's very possible that it's going to take the housing market down with it. Because even though at this very moment supply is very low, that will change in recessionary times due to the factors that I just mentioned. Because if the stock market starts going down, which it already has been, year to date, the Dow Jones is down over more than 4,000 points, and it continues to go down week by week. However, when the stock market goes down, it causes a few other things to happen. Consumer confidence dwindles, companies get scared, and publicly traded companies that are losing money could possibly be forced to close their doors and lay off some of their employees, which we've already seen a lot happen recently in the mortgage industry, and that could be just the beginning. Mortgage rates are extremely high right now, hovering close to 6% for a 30-year fix. These mortgage companies are laying off their employees because there's just not as much demand for mortgages. Well, as inflation ticks up and the cost of everything goes up, well, that's also going to kill some of the demand for other things that are not really essential right now. And the consequence of that is more companies will be laying off some of their employees. And if some of those employees are people who own a home, they might be forced to sell that home, especially if they bought that home within the last year or so and they paid an all-time high price for it, and their mortgage payment is basically higher than pretty much anybody else's payment who bought a similar house, say a few years prior to now. Well, that person is going to be struggling to pay that mortgage. So what could happen in a recession, if we have a lot of layoffs, people could be losing their homes because they have no other choice. They need to sell it before they can't pay anymore. Then they're forced into an even worse situation like a foreclosure or short sale, which should always be a last resort. Any wise homeowner would be willing to sell their home even for less than they paid for it and hopefully walk away with a little something versus just not paying and then going into foreclosure. That's a terrible idea for a multitude of reasons, which I'm not going to get into in this video. That's a way that the recession could actually increase the supply of properties on the market, because as more people lose their jobs, as unemployment goes up, we have people now that need to sell their home in order to just get by and stay afloat. They might be able to make a little bit of a profit off that home, and then they will actually be able to use some of that money to live until maybe they can get their next job or figure out their next move in life. However, imagine all of this happening at once. If there is a recession and a lot of people lose their jobs all at the same time, and a lot of those people need to sell their homes all at the same time, well, guess what we just solved? We solved that problem of supply and demand. No longer are we going to have a situation where the supply is extremely low. Now we'll be back to more of a balanced market, meaning that buyers who did wait it out a little bit will at the very least have more choices of which home they're going to buy, let alone a possibility of lower prices if enough homes hit the market all at the same time. The downside is those interest rates are still going to be very high, and there might not be as many buyers out there, which could increase inventory even further. Because if there's less buyers out there who can afford the homes, prices need to come down even more in order for those buyers to afford that same home at that 6% interest rate. By now, I think you guys are starting to see how all of this is connected, because yes, we are in a situation at this very moment where the demand for housing is significantly higher than the supply, but it wouldn't take much in our economy to turn that dynamic around quite fast, because I made a video about a week or two ago explaining how there really is no shortage of inventory out there. The problem is there's just not people listing their homes for sale that would normally list, because so many home sellers are trapped right now by having nowhere else to go if they did sell their home. There are no good options. They will have to pay more for a similar home if they were going to sell their home. For most sellers, it just doesn't make sense to sell right now. However, not everybody will have the luxury to choose if they want to sell or not in a recession. So what we really need to pay attention to moving forward is watching the stock market, seeing how far it does keep going down, and watching to see the unemployment numbers to see, is this going up? Are there more people losing their jobs? Paying attention to the news headlines in the sense that, are there more companies starting to perform layoffs? Are there companies that are going out of business because a recession is hitting? And some of the examples that get hit hardest during the recession, for example, would be a business like restaurants. Restaurants have already gotten hit very hard during the pandemic due to all of the shutdowns and the rules and restrictions regarding going out in public. And now, if there's a recession coming shortly after some of these businesses have recently recovered, there's a good chance they probably won't be able to withstand the next blow of people just not eating out because they simply can't afford it anymore and need to cut back on unnecessary expenses and put their money towards things they actually need, like food at home and a roof over their head and clothing. And if we just stick with restaurants for a minute as an example of one type of business that could fail the most during a recession, let's look at a couple different things. One is the business owner themselves. Obviously, if they closed their doors, they had a successful business, whether or not they'll be able to make it and start a new type of business or survive after closing their doors, who knows? But what about all their employees? Everybody that used to work for the restaurant, and not just the people who used to work for the restaurant who have lost their jobs, but what about the suppliers, the food suppliers who bring in all of the food and plates and silverware and everything that the restaurant needs to operate? Well, that company is now going to be losing that account because that business is no longer in operation. So you see, as just one business closing, this one restaurant closing has a ripple effect across the economy in a lot of different ways in regards to multiple people losing their jobs, as well as a supply chain starting to break down because now there is less business to go around for these food suppliers and whatever type of businesses that could impact from there. And I guarantee you, the restaurant business is not going to be the only business that is affected during a recession. So when we have all these different types of businesses that could potentially close their doors during a recession, you can easily see how we could be in a situation that could easily bring more housing inventory to market sooner than later. So in my personal opinion, I just think that a lot of people who think that the housing market cannot come down in a recession they're just wrong, because it really can. I'm not saying for sure that it will. There is a possibility that demand can stay very high even with rising interest rates, and somehow miraculously people can still keep affording to buy homes at extremely high prices and high interest rates. However, in a recessionary time, I just don't see that being the case. It's probably very unlikely. In fact, even a recent article from Redfin highlighted how homebuyer demand and the searches on Google for homes for sale is starting to decline because people are finally at the breaking point. Inflation is hurting everyone's pocket right now, and people are starting to get worried that there could be a recession coming, and buying a home right now at these exorbitant prices and interest rates just looks less and less appealing by the day. So we might not need these 5 million homes to be built to solve America's housing problem. I really don't think we do. I just think we need more listings to come to market. And if a recession does hit us, then we are almost guaranteed to see more homes hit the market, not because people want to sell, but out of necessity. If you guys enjoyed this video and you agree with a lot of things I said in it, then check out this video right over here about why you should wait out the housing market, and I'll catch you over there.